I recently came across a trend-following indicator on TradingView that really caught my eye. It gives possible entries based on breakouts, and honestly, it performs surprisingly well. I've seen it work across different markets, such as Forex, stocks, and also crypto, and when it comes to time frames, the lower you go, the better the results seem to get. To pull up this indicator, just head over to the TradingView, open the Indicators tab, and type in Logarithmic Regression Channel Trend, which is written by Big Beluga. Once you click on it, it'll show up on your chart in a default form. You'll see a trend following ribbon and a channel. Now if you go to the indicator settings, you'll notice a look back period. That's basically the number of candles the indicator looks at before making its next move. Then you've got channel width and length, which are all about the channel itself, how wide and long it appears. And finally, in the Styles tab, you'll find a few options to tweak how the indicator looks. That is optional, just for the appearance. That trend following line floating around the chart, it's actually a dynamic support and resistance. So when you see price breaking out from that line, that is your cue. Those breakouts could be solid trading opportunities. Like in this example, this was a really strong breakout. You can see how the candles started moving down and eventually touched the lower wall of the channel. Now speaking of that channel, when it turns red, it means the overall movement in that area is bearish. It follows the trend, and once a momentum shift happens, it changes color. On the flip side, when the candles break above the blue band, that is a potential long setup. In an uptrend, candles push up, toward, or even touch the upper wall of the channel. So when that channel is blue, it signals bullish momentum, meaning the general movement in that zone is to the upside. Alright, here's where the things get interesting. To really level up your trading setup, you cannot just rely on one indicator, no matter how good it is. You have to combine it with some basic price action techniques if you want consistent and reliable entries. Now check this out. On this chart, there is a breakout from the ribbon, but I just don't jump into a trade. Instead, I draw a PRZ, basically a strong resistance zone, and I wait for that breakout before thinking about entering. Here's the key moment. Once candles start pushing up and we see a break above that resistance, that's my possible confirmation for a long trade. And look what happens next. Candles started climbing, and the channel turns blue, signaling a momentum shift to the upside. Another simple but powerful price action method you can use to level up your setup is drawing trend lines. Take a look at this example. We've got a trend line breakout. It lines up perfectly with a long indication from the indicator. And once again, notice how the channel turns blue, confirming the momentum shift to the upside. We can also add another trading indicator to the setup to get more confirmations. And remember, more confirmations are key in trading. The indicator we're going to use is actually famous for showing divergence on your chart, which is an early sign that a reversal might be coming. So head back to the Indicators tab and bring up the RSI, or Relative Strength Index. I'm sure you've used this one at least once or twice. The RSI indicator is one of the most reliable indicators in trading. It gives you simple information, like when the market is overbought, that is when the RSI moves above 70, or even oversold, when it drops below 30. But here's the thing, that overbought or oversold signal isn't what we're focusing on today. Check out this chart. The candles are making higher highs, showing a clear uptrend. But if you look at the RSI, it is making a lower low, which is contradicting the price movement. This contradiction is called divergence, and it is a strong sign that the market could reverse soon. Another example, the candles are making lower lows, signaling that there is a downtrend. But the RSI is making higher lows. That difference between the indicator and price is another warning that a reversal might be coming. This again is called divergence. Alright, now let's put everything together and build a solid trading setup. First, in the indicator settings, you can uncheck graphic objects, which hides the channel. Honestly, the trend following ribbon is all you really need. Take a look at this chart. We've got a ribbon breakout, so do I jump in? No. First, I check for price action and look for RSI divergence. See what's happening here. The candles are making a slight higher high, but the RSI is making a lower high. That is our first confirmation. I draw a trend line along the uptrend to find a safer entry point. That will be our second confirmation. Once the breakout happens, we might have a short opportunity. Here is another chart. I draw a trend line for this downtrend to track the movement and watch for a breakout. We also spot divergence, which helps filter out false signals and gives us a heads up for a possible uptrend. When candles break out from the trend line and the ribbon, you know what to do next. So just to make it crystal clear, here are two more examples. You can actually use the RSI indicator to track divergence with some secret settings, especially on gold or Bitcoin lower timeframes, like 1 minute chart, to possibly catch some really quick trades. And don't worry, I've got you covered. There's a video on our channel called 1 minute RSI scalping strategy, where I show some indicator settings nobody really talks about. In that video, I reveal a side of RSI you won't find anywhere else. It basically unlocks the true power of this classic indicator, giving you a few scalping strategies that could potentially help your portfolio. I've left the link in the description below, so make sure you check it out. And before you go, I have to announce that I'm not a financial advisor, and this is not a financial advice. All content, information and opinions shared in this video are for educational and entertainment purpose only. Trading involves risk. Make sure you consult a professional before taking financial decisions.